traders at UBA anticipate that in the coming days, an uptrend in yield will drive a bearish bias in the treasuries market as the bond market sentiments remain mixed. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you so much for taking the time out to join us today. Bring us up to speed on this development at the market and how it could shape trading going forward.
Okay, thank you, Esther. The market has been mixed, but pretty quiet. We've seen yield move about, on the T-bill side, about 50 basis points from where it closed on Friday. So we saw the last 1 year that came out at 10.17, currently trading around below 7.5%. On the bond side has also been a bit quiet, though we've seen bullish sentiment on the 2037 and then 2049. People who lost at the auctions still trying to cover. And again, the system is still very liquid from the coupon payment last week as well as bond maturity last week. We still have quite a liquid system. Right.
I'd like us to just quickly, on the side, just quickly talk about the Fed's meeting. Two-day meeting concludes today, and of course, all eyes on the decision. General consensus is that there will be a rate hike of about 0.25%, and the Fed could signal a pause, but it's been said also that a pause doesn't mean it's actually going to stop, for the year. But what are your thoughts about the Fed decision, if they do go in that direction, and the signal to markets?
Yeah, most likely the Fed will increase rates. Will probably increase by 25 basis points or 30 basis points. That has been the pattern over the past 1 year. We've seen a gradual increase in rate, and basically to fight inflation. But on the flip side, it's also hurting some of the banks there, because increment in rate has necessitated people buying securities. People pulling out of the investment, and then that has actually drowned some of the banks, Silicon Valley, for example. But then the monetary policy, which is Fed, feels that the overall interest of the economy is paramount, and that's why they continue to increase rate.
Let's quickly talk about our own MPC outcome for this month. Just before they hand over to the new government, perhaps comments will be made about monetary policy and its impact so far, the pass-through, and if they have seen the effect, the impact that they've been hoping it would have based on subsequent MPC decisions. But what kind of comments are you hoping to hear? We're going to see a rate hike. What signal would you expect the MPC to send to the markets?
I think the MPC has done pretty well in terms of trying to cut the inflation moving forward and moving upward. So if you notice over the past months, the couple of last MPC meeting, they've been on the increment in the rate. The last one was around about 100 basis points. And the governor signaled that, look, as long as inflation continues to go up, MPC will continue to react. And so for me, I think that they probably might hold this time around, just to see how the rate hike, the previous rate hike, has affected the economy. And again, being that a new government will be sworn in this month, we expect that MPC will probably just sit on the fence and then allow the government come in and then see the economic agenda, the blueprint, which I know somehow they already have. Then they will take a decision. But with the government announcing that fuel subsidy will not be removed in June, it will be interesting to see what MPC will do about that, because a lot of their decision has been factored in around inflation, and then what will be the outcome of inflation with the removal of fuel subsidy.
Well, you're right indeed, but I mean, perhaps I can take some comfort in the fact that the incoming president has said, repeatedly that he will take that hard decision. But like you said, it's left to be seen. Just your thoughts on, I mean, if you could speak to the trajectory of Nigeria's fixed income yields going forward. We know that, of course, it's expensive now for many countries in developing Africa to borrow at international markets. Ghana is a classic example at this time. So just, your thoughts on bondholders and how they're thinking about our market.
Yeah, I think that the markets, Nigerian market, will continue to be, we continue to, liquidity will continue to dictate the pace of our market. Over the past 2 weeks, we've seen liquidity in the system, and then we saw that yield drop because people are trying to fill in, take advantage of the liquidity in the system and then try to invest. However, within the next 2-3 weeks, going into June, we will see drought in the liquidity, and that will elevate the yield further. And that is why we've seen that the market has been slightly quiet because of many traders anticipate that we see higher yield, in the next couple of days and months, and so that has actually affected our, the activities in the market. Now, on the foreign investors and then what they look out for, I think that everybody is still watching and to see what the new government will come up with. Right. Like you rightly mentioned, the president-elect has said he's going to remove subsidy. Personally, I think he will, but then I don't think he will remove it just immediately. And probably he might just allow his government to stabilize maybe in the next 6 months before taking a decision. So.
Right. Thank you so much, Chuka. We're going to have to leave there. But thank you so much for sharing that with us. Appreciate your time on this show, as always. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA. But